Hi and welcome to Trade of the Week. In the days before I turned to spread betting, I earned my crust as a fund manager, dealing in government and corporate bonds, and this week I returned to my old stomping ground for a trade. For those of you not familiar with bonds, they're usually filed away in the dull and boring section. On the excitement scale, they're more Bolton Wanderers than Arsenal. But there are certain times that present ideal opportunities for trading bonds. In the past, these were mainly in response to economic data on inflation, growth and government borrowing, but these days we get the opportunity to trade on comments relating to quantitative easing. Any hint of an extension of the QE programs gives gilts a turbocharge. Rumours of an end to the program sends prices tumbling. Wednesday's Bank of England quarterly inflation report wasn't expected to be too exciting, but traders would be watching for comments on whether the QE program was nearing an end. My plan here was simple. I was on the lookout for any change in stance on interest rates, negative deposit rates for banks, or the ending or extension of the QE program. If I thought Swervin Mervyn said something new, I'd be happy to trade in either direction, on both gilts and sterling. In this case, I'd be looking to trade at market levels. Because bonds are less volatile than most other markets, I was also happy to use a larger bet size, trading £10 instead of my usual fiver. The fact that the market had fallen ahead of the meeting made choosing a stop loss level easier. If I went long, I'd place my stop at either the lesser of either 20 ticks below the day's low or 30 ticks below my entry price. If I decided to short the market instead, I'd simply use a 30 tick stop loss. This limited my loss to £300. At 10:30, the statement came out. The prepared statement combined higher growth estimates with the view that inflation would rise in the near term before falling further out. Gilts started to move off their bottoms, but it wasn't until the Q&A session that things got really interesting. When asked about the QE programme, Swervin Mervyn said that they were keeping an open mind and hadn't ruled out further action. This lit the blue touch paper, and I joined the queue looking to buy gilts. I paid £116.85 for a £10 bet, placing my stop at £116.55. Let's show you where it was. Right about there. I closed out £4 at 117.15, bringing my stop loss up to break even. So that was there. I sold a further £2 at 117.35 for plus 50 pips, then left the trade whilst I got on with the more risky task of trading currencies. The price remained above its 21 period moving average and didn't get into oversold territory all day, so I had no reason to close the trade out until the close. I didn't fancy running the trade overnight, so I sold my final £4 at 117.50. That's right about there. In total I made 30 pips on £4, 50 pips on £2 and 65 pips on £4, giving me a total profit of £480. Perhaps not a sparkling trade, and the price range is usually fairly tight, but gilts are worth looking at when the Bank of England members are due to speak. Have a good weekend.